Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing AMD stock so we can determine if it's a buy or a sell. AMD, or Advanced Micro Devices, is a semiconductor company. Its main products include microprocessors, motherboard chipsets, workstations, personal computers, and much more. They've also expanded into new markets such as data centers and the gaming market. They also announced plans to enter the high-performance computing market. The company is headquartered in Santa Clara, California, and was founded in 1969. Let's get started with the model. This is a large cap company, 140 billion market cap. They're trading at $88 a share, and they have 1.6 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow grows a ton from $500 million way up to $3.6 billion. It was pretty much flat from 2021 to 2022. Same thing with Nvidia, flat for those 2 years. Net income is the profit or loss on the income statement. It's revenue minus expenses. That grows a lot from $300 million in 2019 to over $3 billion in 2021. It does come down a lot to $1.3 billion in 2022, but they must have had lots of write-downs because they had pretty high free cash flow that year. Revenue is a sales for the company, and that grows steadily from $6.7 billion to nearly $24 billion. So pretty impressive growth. Let's look at the capital structure. They have $55 billion of equity, $3 billion of debt. So they're 95% equity, 5% debt. They could pay off all the debt with the cash on their balance sheet and still have $3 billion of cash left over. I gave them a weighted average cost of capital of 11.3%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's $85 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $74 billion. We divide that by 1.6 billion shares. And we get a calculated stock price of $46. They're trading at $88, so they're trading at a 91% premium. It's a sell according to the model. The website Simply Wall Street has them at $85. They're saying it's 4% overvalued. 25 analysts priced this stock, and the average price target is $99. The low is $68, the high is $200. From 2009 to 2016, the stock was really low. Imagine getting it way back then. And then it looks like it peaked at the very end of 2021, over $150 a share. Then it really crashed in 2022, getting close to $50. It has come up quite a bit since that point. It almost doubled, sitting around $90 right now. If you bought this stock in 2006, it would have taken you 15 years to see a profit. A lot of people can't sit on the stock that long and wait. They get really impatient. Most people get impatient after 1 month, let alone 15 years. There are 62 companies in the same industry as AMD, and if AMD has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They spend a lot less than average in CapEx. It looks like they outsource their manufacturing. They have a really good debt to equity ratio, best on this list. They do not pay a dividend. Most semiconductor companies do pay a dividend. They generate more free cash flow than average. They rank 5th in market cap. They have a really good price to book since they have such little debt, but their PE is pretty weak. Price to free cash flow is worse than average. Price to sales a little better than average. They generate lots of revenue. They're growing a lot. Their 5-year annual revenue growth rate is 35%, and they have a pretty low ROA and ROE. So to summarize, I have them trading at a 91% premium. I rank their free cash flow 7 out of 10, their revenue 9 out of 10, and their ratio is 4 to 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.